Okay, let me start the webinar. Good day everyone, and all. This is Dr. Sivaraman of iknowindices.com. So, I'll explain to you during this Asian session live market analysis the derived forecast for this particular week and also the levels at which the currencies could fluctuate or establish the low and the high during the day. Then also we will try to read the market reading technique, how exactly we can fine tune the forecast. So this week is from 10th to 14th of February and we are on 10th and around 5 GMT. I will explain to you the derived forecast to start with. So this derived forecast is statistically derived and based on the market moves of the previous weeks and also the months, and then that derivation gives a gross picture about what could happen during this particular week. And later on, we have to fine-tune the forecast using the market reading technique in order to understand how the specific currencies are expected to make the moves. Now, before going to that of the forecast, let me just recollect what has happened on Friday, that is 7th of February, for that of the non-farm payroll. Now, you know that Euro and GBP were making the downward move before that of the release of the non-farm payroll, and then subsequently they made some volatile moves and gained as expected in the case of Euro and GBP. And also they gained the levels in the case of USD yen. So, which indicated that they have done the contrarian rise. And when they do the contrarian rise, that means still they are busy in handling the crosses. So until they finish with that of the crosses, they are not going to make any big shift in trading zone. So that we need to understand. So coming to today's market, now Euro is showing 10 pips negative net change, GBP is showing 3 pips negative net change, and Aussie is showing about 26 pips negative net change. They are doing the USD gaining move. And yen is showing 7 pips positive, 9 pips positive net change. USD CHF is showing 7 pips positive net change, whereas Canadian dollar is showing 4 pips negative net change. So the majors are showing the USD gaining move, but the commodity pairs are showing the contrarian move. When commodity pairs show the contrarian move, this week again the players are expected to make the trend reversal move. To start with, they will handle the commodity crosses, then followed by the commodity currencies, USD CAD and Australian dollar. Then afterwards, they will do the yen crosses, the trend reversal moves, and then come to the majors, and finally the European crosses. So that means still they are not completed their trend reversal moves last week. I think during that of the trend reversal move, normally what they do is they hold near that of the low or near that of the high and induce the traders to become bearish near that of the low and try to accumulate more buy positions. Similarly, try to hold near that of the high and accumulate more sell positions before the big reversals and shift in trading zone. But they didn't have time, I believe, that many of the traders would not have taken any positions until the non-farm payroll is out. So that is why you come across the players are still trying to make the trend reversal move during the second week of February, and they will try to make the downward move and accumulate more buy positions during this particular process. And also, before that of the big trending move, they need to do the extended stop at. And a classical example of extended stop-in, they had done it on Friday in the case of USD yen. They quickly dropped it from 102.50 to 101.45 and then reversed and gained above the 102, started going upward up to 102.60 and then hovering around that of 102.30, 20 and things like that. So that sort of extended stop-in, that means they make about 100 pips drop and recover in a matter of about 2-3 hours, sometimes even 30 minutes, and then start holding at a higher level and continue their rise. So in the case of USD yen, they had done such extended downward stop-in, indicating that they will make the further upward shift in trading zone. So when USD yen is making an upward shift in trading zone, then that will be USD gaining move. And you know that non-farm payroll was less than expected, so the traders would have fundamentally developed the feel that US dollar might lose its shine. But the players are known to create the sentiment and act against the traders, and slowly they will try to make the downward move in the case of Euro, GBP and Australian dollar, and gain USD yen and USD CHF and drop USD CAD. So in such a scenario, what will happen? That you will come across the USD gaining move in the majors and contrarian move in the case of the commodity pairs. So that may give further confusions to the traders whether they are going to reverse or not. Probably by end of this week or by next week, they will try to bring the extended downward stop-in in the case of Euro and GBP and try to reverse quickly, and that could lead to the contrarian rise in the case of Euro, GBP and also USD yen and USD CHF. The commodity pairs, however, they are expected to make their own moves. As I explained that they have done the trend reversal moves and they are expected to make, Aussie is expected to make a slide again and then make a wide range swings, and USD CAD is expected to make a quick drop to 1.0807 area and then start gaining above that of 1.12 during the course of this month. So let us look at the expected market moves for this particular week. So today, 10th of February, swing and firm up moves could be seen during the Japanese session in the case of Euro and GBP, and then swing and slide could be seen during European and US sessions. Then again tomorrow during the Japanese session, swing and slide could be seen. In European session and US session, they may make nominal swing and firm up move, and then again slide, firm up and slide on 12th of February. Then firm up during the European session and slide again during the US session. Then they could, once the volume builds up, they could drop during the Thursday during Japanese session and firm up and slide during the European session and swing and firm up as a small recovery move. Then again 14th firm up and slide, rise and drop during the European session, and then make the further slide and small firming up towards the close on Friday. So you'll come across more drop and less rise moves during this particular week. Then the following week, 17th to 21st, if they have completed the sequential trend reversals in the case of the crosses, then they come to the majors doing the week beginning false move followed by the upward trend move. So let us see how far they are taking the time. See, one of the factor could be the volume. So when the volume comes down, then the players are not in a position to accumulate the required positions before making any big rise. Because they simply take about 1,000 lots and 2,000 lots position, buy position and rise, and they will not be able to handle the market. And for their investment, the return will be very, very negligible. So they have to accumulate that thousands and thousands of buy positions at the lower level, inducing the traders to develop the bearish field and sell. Normally what they do is they do the lower level consolidation with the downward stop and before making further rise. So still lower level consolidation with the downward stop is not seen, so they are unlikely to breach their recent highs in the market. So they are expected to come down again and try to accumulate more buy position. In order to induce such field, the bearish field in the majors, they could quickly gain the levels in the case of USD yen, as they have done the extended downward stop in the case of USD yen. Gaining the levels in the case of USD yen may create the bearish field in the case of Euro and GBP, and the traders could go in for a sell and buy trade. So watch on a daily basis and try to find out what they are trying to do in the market using the market trading technique, and then try to take appropriate positions. And the expected range at which the currencies could move. Currently, Euro is trading around 1.36 area, and the upside could be 1.3650, the lower level could be 1.3350. And in the case of GBP, it could revisit 1.62, probably further lower than the last 1.6250 area, and then they may make a brief upward move in order to create the bullish feel and then start making the slide. Then in the case of yen, that slowly from 102, they are expected to gain to 104 area. Then in the case of CHF, from 89.75, they are expected to go to 93.50. Then USD CAD, from that of 1050, 1.1050 level, they could come down to 1.08 area. And in the case of Aussie, currently around 89 area, they may make a brief upward move if needed and then start making the slide in order to handle the commodity crosses, Aussie crosses. And afterwards, they are expected to make the slide in the case of Aussie. So keep that in mind and use it as a reference level and try to trade. Now, with regard to that of the market trading technique, so we note down the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs, and try to watch the live market code page, find out exactly they are breaching the high or the low afterwards, and based on the type of moves, we try to identify whether they are going to take up the market up or lower the market. Because the stop and the false move and also the extended moves or the pretension moves, they try to do it before the intentional move. So ultimately, we are more interested in finding out the intentional move. The intentional move can be revealed after that of the false move. So we try to identify the false move when they do quick moves. So if they quickly drop, we understand, okay, they wanted to rise. When they quickly rise, then we understand that they wanted to drop. So accordingly, we try to understand and take positions without any market fear. To limit the risk, we keep 30 pips hedge order to limit the risk. And once the position makes profit, we try to keep stop at entry and try to earn using a trailing stop and 45 pips limit or take profit order or 75 pips if the market momentum is good. Now in the case of Euro, the platform showed the low as 1.3614, but in the live market code page 1.3553 is shown. Sometimes, the interbank treasuries set the lows and the highs during start of the day, and that might be reflected here. So there is likelihood that they will visit this particular level. Anyhow, they are not breached the low or the high in the case of Euro. Then in the case of GBP, 1.6402 and 1.6417, that they are not breached, but still in the very narrow range, Euro and GBP are making the swings. Then in the case of USD Yen, they just made a brief downward stop into 102.32 from the 33 and started gaining the levels. So they are likely to go above the 102.65. Then USD CHF 89.81, 89.92 was on the highest breached. And in the case of Canadian dollar, also the low and the high are not breached. And in the case of Australian dollar, they breached the low. 89.28 has become the new low. 89.38 was the initial low, and still staying below that. And 89.59 is the high. So they are likely to increase the intensity of the downward move during the course of the day. So both USD CAD as well as Australian dollar are expected to make the downward move. And also we'll come across Euro and GBP making the downward move. USD Yen and USD CHF are expected to make the upward move during the day. That's what the market reading technique says. So that is being narrated here, and with the help of the slide, and this webinar is being recorded, so you can go through that. What I explained earlier, the same. We note down the initial lows and the highs around 3:30 GMT, and entry, we try to take a sell near that of the high or buy near that of the low when the high or the low are not reached from 30 minutes from the start of the session. The session timings are given in the next slide. And once the position makes profit, we keep stop at entry and remove the hedge order, which is placed 30 pips away from the other position. And once the position makes 25 pips profit, we keep stop at entry and remove the hedge order. Thereby, the risk is eliminated. And then 45 pips limit is kept when the market is making slow momentum. And if the momentum is good, then we keep about 75 pips limit. The market would either hit our trailing stop or the take profit order so that we are able to grab the profit. So in our money management, we first of all try to see that we don't incur any loss by keeping stop at entry. Then subsequently, we maximize the profit using a trailing stop and also the trailing take profit order. The market timings are shown in this particular slide. Always keep in mind when a pair is making more than 40 pips spread between the low and the high, they are handling to start with. Identify that and try to take positions in that based on the type of moves it is making and wait for such quick moves. Always quick moves are false move, as I explained. When they quickly rise, then take sell position. When they quickly drop and stop cutting the new low for more than 30 minutes, try to take a buy. You will be able to quickly see the profit in the trade. Then also they handle only two pairs at a given time. So identify those two pairs where they are making 40 pips spread between the high and the low. And once they make the spread between the high and the low more than 40 pips, that means they are handling the particular currency. Then later on, they will handle one by one all other currencies. So if you got any doubt, you can ask me the questions. I'll be willing to answer to those questions. We have about 10 minutes to go. You can ask the questions. I'll be willing to answer to those questions. So meanwhile, I'll show the expected market moves slide. And Grigor. Where do you see stock in 2014? As I explained that they are expected to make the higher level consolidation and try to make the slide in the case of stock market, which I explained in the earlier webinar. I will see whether the slide is available. Yeah. Here it is. Stock market to undergo big corrective wave. That is the forecast for 2014. Okay. Any other questions? I'll be willing to answer those questions. Okay. Okay, the technique is working fine. I'm very happy about it. Try to make your trading system as simple as possible without complications. And always keep in mind, we do the analysis for our trade, not for any government agencies or big institutions and things like that. So they do the analysis according to their money power. But we cannot use such analysis for our small equity trade. So we have to always keep in mind that we have to do the analysis. Probably we can take the information from various other sources, but ultimately we do the analysis according to the requirement, according to the limit at which we can take the positions, and then try to trade safely using lesser positions so that less risk is involved, and immediately eliminate the risk by keeping stop at entry. Then you find that you are not incurring any loss. Slowly you will be able to build up your equity. So if you are impulsive and try to earn as quickly as possible, that may lead to quick loss in the market. And after losing, you become more and more impulsive and try to grab it by taking more lots, and that leads to margin call and wiping of the account. There is no big deal or calling it as a great thing by simply say that I have blown my account twice. Because many people have got the tendency of telling that it does not show the richness of a person. It shows that how emotional he is. So if I say simply, I have blown my account of $50,000, there is no greatness involved in it. That means I did not know how to handle it. And just because I can afford to lose it, I am just disclosing to others. But that does not show that I have really learned or mastered the trading technique. So my humble suggestion will be that try to take very less position, understand how the players are making the moves in the market, use various inputs, and try to backtest and see how far such informations are really useful for you in a consistent way. Then try to follow it. Simply just because he is a great man, he is from the bank, and you simply follow the forecast, you may end up in making money on certain occasions, especially during the trending time. And during the trend reversal time, it may just give the opposite result. But ultimately, in such a scenario, nobody is going to tell you how to handle your positions. So that you have to develop on your own. And my simple suggestion will be, don't risk more than 30 pips at any given time, whether you do a sell and buy or a buy and sell trade. And try to see that you are able to keep stop at entry to limit the risk. And it may appear that if you keep stop at entry, they may hit your stop and then try to make the move as you are expected. Does not matter. Because if you see that sort of moves for 2-3 times, then you will be able to understand, okay, if they hit my stop and the stop hit level is not making any profit for about 30 minutes, I'll reinstate my buy position. So that way you will be able to easily develop the mindset. Then you see that still you'll be able to capture the profit. So because if you hold the position only, you will be able to make profit. But if you hold the position without a stop or without a strategy, you may lose money. Because in the market, you don't come across a consistent rise or a consistent drop. Always they try to make volatile moves. So these volatile moves you should be in a position to identify using the market trading technique. That if you follow the market timing and also the type of moves, I am 100% sure that you will not take a wrong position. Is GBP going to drop in this week? As far as GBP is concerned, it is not going to, GBP is not going to make any big headway. And they are, as I explained, that Euro is expected to come down and GBP is expected to come down during this week, and USD is expected to gain. In the process, that Sometimes they may make a small dip along with that of GBP in the case of USD yen, but may not be a big drop. But afterwards they may rise USD yen. So slowly swing and rise moves could be seen in the case of GBP yen. Then jump here. Yeah. Are you expecting euro and GBP to fall? Yes. This week, because still they are not completed the trend reversal moves as they gained euro, GBP as well as USD yen. Normally after the non-farm payroll, what they do is they try to do either USD weakening or the USD gaining move. But on Friday, they made the big contrarian move. That is, they gained the levels in the case of euro and GBP, gained the level in the case of USD yen, and they held euro USD CH the same level without much of a gain or a drop. But in the case of Canadian dollar as well as Australian dollar, they made the drop. All contrarian moves for a weekend. So that shows that still they are busy in either buying the crosses, building the buy positions in the crosses, or they are not in a position to exit out of the holding positions in the case of crosses. So in such a way, in such a scenario, they always try to continue their sequential trend reversals. And they are already started the sequential trend reversals by making the contrarian moves in the case of commodity crosses, by making contrarian move in the case of commodities. So which confirms that they'll be making such sequential trend reversal move, and in that they will first handle the commodity crosses, then commodities, and then that of the yen crosses, yen and the majors, then finally the European crosses. And as the week proceeds, you will be able to see how they are handling one by one such currencies. Then what could be the trend in the case of euro yen? As explained, similar to that of GBP yen, euro yen is also expected to make a narrow range swing, probably a 75 pip swing on a daily basis, not a big downward or a upward move. Then how much downward move in the case of Australian dollar? Mohan Kumar could revisit 87 area. Then George, how to manage money like $100 with a size position split? No, if the equity is $100, then you can take only a micro lot. Only then you will be able to avoid margin call. And if you have $100, don't take positions for about $75 or $50, because if the market moves 50 pips away from you, either you have to stop out or you will get a margin call. So it is extremely difficult to handle such situations. And one of the alternative could be wait for big moves in the market and try to enter. And in that, if you try to enter early, then the big move may continue another 30, 40 pips, and you can, just like that in fraction of a second, the margin call. So it is not advisable to trade with equity like $100. Instead, you can keep away from the market and get rid of your addictive trading condition and do some other thing and earn $100 on a daily basis or at least a weekly basis. Then, Tafita, can we have the repeat of the session, because I did not get it very well. Okay, this webinar is being recorded. Adinda has replied it, and the recorded webinar will be available in another 2-3 hours in fxtrade.com under the heading webinar. Then you can just see, once you click on the headers webinar, you will be able to see in this Asian social market analysis being displayed. You can click and you will be able to get it. Okay. Stand C. Once the 40 pips is identified in a given pair, is the time important? Yes, the time is important. Once you find that 40 pips is being made, then if you want to trade in that pair, wait for the early or late session. If you are in the case natures, if you are in the case of cross, then wait for 70 pip spread. 70 pip spread between the high and the low. Then try to take positions during the mid-session. If it is near the low, not breach the low for more than 30 minutes during the mid-session, you take a buy, then you'll be able to book profit during a small rise. So that sort of thing you have to do, but they have to make 70 pip spread between the low and the high in the case of crosses. Otherwise, if you simply take position, you may not be able to see any headway. And that can give the satisfaction to you that you are holding some position. And you can talk about that particular currency to your friends in the chat and also other form of communications. But that is not going to give you the profit. So ultimately, we are all entering into the market in order to make money. So keep that objective working all the time. So example, if I take a position at the open of the European session, must it be identified from that start and the end of the ASH session? Yeah, you can use the live market code page, and if you see that they have made the spread more than 40 pips, and if the market is near the high, so 7:30 the European session, the session timings are here. So 7:30 to 8 is a gap time, then 8 GMT the European session starts. So you watch for 30 minutes from 8 to 8:30. And in that, they are holding near the high, not breach the high for this 30 minutes observation. Take a sell, will be able to book profit. And in case, if they have breached the low and stay below the low till 8:30 GMT, not coming above, then try to take a sell even that near the low. Then you will be able to see, because they will be making at least for 2 hours an extended downward move. And if needed, they may do the intentional downward move. That way also you can do it as a technical trade. When could you expect the rise in USDN? USDN is expected to rise from now, slowly. Any dip is a buy opportunity. So, no more questions. So, I take this opportunity to thank Apex Street for the facilities provided and recording the webinar. And also you people who have come here to listen to my webinar. And I'm thankful to you. And try to see that what is the truth in it and try to make use of it during your trading. And always see that you take less positions so that there is no market fear. And get rid of the market fear, then you will be able to perceive the market with the right objective. And if you take more positions, and you are likely to become afraid because your eye will be looking into that of the eroding usable margin, not into that of the market. So if you want to see the market, then your position should be very less so that you will be able to perceive it easily when they are making moves in the market. To take more positions, like some people have got the tendency to take 2-3 lots at a given time, even though the equity is not very big, thinking that, okay, during the first drop, I'll book some profit, second drop, I'll book some profit, third drop, I'll book some profit, theoretically fine. But I have seen many of the occasions, such traders come back to me and say that the first lot they booked the profit, the second and the third they booked the loss. Because see, all theoretical derivations are fine as long as the market is moving in tandem with that of your expectations. When the market moves against your expectations, you should be able to handle it with a contingency plan, and you should not do the crisis management. So keep that in mind and try to earn from the markets wisely. Thank you one and all. See you on Thursday. I'll come back on 13th and try to review the forecast, what I have given it, and try to take it from there and explain to you what could happen during Thursday and Friday market hours. Thank you one and all. Wish you all the best in your trading.